heavy hitters of global investment descended on the Sown Hearts and Minds conference on Friday, which, by the way, raises more money for medical research in Australia than anything else.
Top billing was Ray Dalio, founder of the world's largest hedge fund, Bridgewater, came to share his investment philosophy and his take on world markets, where he says investors are buying dreams rather than earnings, thanks to central banks easing around the world.
And now on Saturday, we should mention the Wall Street Journal claimed that Bridgewater had made a $1 billion bet that stock markets would actually drop by March, a claim that he actually denied yesterday. Here's our interview. Ray Dalio, welcome back to Australia.
Thank you. It's good to be back.
Very interested in your talk about life and work principles, Ray. After all these years, you still write everything down and analyse it.
Yeah, I've gotten a habit. It's a great habit to be in. You know, whenever I make a decision, I sort of pause and think, what are my criteria for making that decision? Yeah. And by expressing it, it brings me clarity of thought, but also it allows others to look at that and stress test that, because the same things happen over and over again. And so when the next one comes along, I find that helpful.
You talked about stress testing your own decisions. How important has that been to you in your life?
Oh, enormously important. I think it just reduces the chance of being wrong, right? You stress test your opinions.
And what do you mean by that?
Well, I think the greatest tragedy of people, I guess therefore the greatest tragedy of mankind, is people who hold on to opinions that might be wrong, that they don't stress test. And if there's a disagreement, how do you know the one who's wrong isn't you? So by being able to stress test them well, you raise the probabilities of being right. It's a logical, good thing to do.
You know, yesterday I actually spoke with Satya Nadella, Microsoft, and I was really interested in his reflection that over his time at Microsoft, some of the big mistakes that were made through envy in a decision. I wondered what you made of that.
Well, I don't know his particular things, but I think these emotional reactions can stand in our way. I think there's the subconscious. Neuroscientists and psychologists explain there's the subconscious, and there's emotions and those things, and they have a big influence. And then there's the conscious and the logical mind. That doesn't mean the subconscious doesn't have a lot of merit, inspiration and intuitions and so on. Very good things can come from the subconscious. But by aligning the subconscious and with the intellectual and stress testing that, I think it raises one's probabilities of being right. So he's talking about envy. You know, that's not a good thing. Or ego, or all those things that are these emotional barriers to making the best decisions.
Exactly.
That's what he's referring to.
Ego, I was going to say, when you look at companies and you speak one-on-one, look business leaders in the eye, is that something you look at, the ego in the room?
I've been very lucky to be able to meet the smartest, most successful people in the world, and I tell you that the smartest ones are the most curious and asking the most questions. Okay, they're the least arrogant people. So I think that may be surprising, because they realize that what they don't know is much greater than what they know, although they may know a lot. So yeah, it's a big differentiating. Do they ask questions, or are they constantly talking, and are they held undetached to what they know? It's a big differentiator.
Ray Dalio, you must be the pin-up guy for value investing. What do you make of the rise, this force of index funds and ETFs over time?
Well, I think it's a sensible move from a cost-effectiveness basis, and it gives a lot of variety and so on. And I think that there's a world, that there's a wave. The wave began in 2008. Central banks began to print a lot of money because interest rates hit zero, and they bought a lot of financial assets. And that caused financial asset prices to rise and yields, expected returns, to go down. And that has been the big wave that they've been on. And in that kind of environment, to cost effectively be on that wave has been a good thing. I think we're going to come into an environment that'll be very different from that.
You say people are buying dreams now.
Well, yeah, because you can't get returns. You know, if you know what a short-term interest rate is, you know what a bond yield is, and you know what those returns are, and they're either zero or they're approaching zero in all places. In Australia, you will come to a point, probably, that you won't be able to lower interest rates anymore, and the world is there. And then the question is, what is the unknown? So let's say a stock return or a private equity return. It's best to sell the dreams. So people now are selling the dreams so that they can have a higher return, because a lot of investors need a higher return. Pension funds and so on need a higher return. And so now a dream. You don't need earnings anymore, right? And right now you may not even have the prospect of earnings. So there's the buying of the dream.
And systemically, do you think, because you compare us not to 2006-07, but more back to the 30s, rather more disturbingly, do you think we're all living a bit of a dream now with this QE and money printing? How do you see the world at the moment?
Well, in 1944 was the time we built the monetary system. It was the end of World War II. The United States was the dominant world power, and we built a monetary system based on the dollar with other currencies like the yen and now the euro attached to it. And that has run a cycle. So we have come to the point where those reserve currencies, that process in which you could create demand by creating debt and stimulating by lower interest rates or printing money, is coming to an end. It's at an end. And so that's very similar to that period. So that's why I make that comparison. Also, another important fact about that comparison is that there was a rising power to challenging an existing power, so it creates global tensions. In other words, we come from a world order in which we had a U.S. and dollar-based world order, fiat currency system, into an environment where that's all being changed, and it's kind of later cycle on that. That dynamic will be an important dynamic over the next 10 years.
You're saying, though, you know, with this printing of money, that we're nearing the end. Then what happens with this sort of monetization of assets, perhaps, and politics?
Taking them in that order. First, you know you're going to have large deficits. And you know that there are other obligations, pension obligations, healthcare obligations, that they're big relative to. So you know you're going to print money. And you know that there's going to be a desire to push those rates, and yet they're at a limit. So we're knowing that we're now in a new phase of this, right? And what a bond is a promise to receive all that currency, but the central banks have the printing of money. And then, of course, there's politics you're asking. And that politics will be populism of the left, populism of the right, or capitalism and socialism. And so choices are going to be made.
Because of this wealth gap that's been created?
Yes, very much like the 30s. Okay, large wealth gap, zero interest rates, printing money causes those with financial assets to benefit relative to those without financial assets. And then so internal tensions, and then external tensions as there's a rising power challenging an existing power.
Yeah, China, America.
Right. Then it was, Germany and Japan challenging those things. So lots of things to argue about. So we have internal conflicts and we have external conflicts at a time as we don't have as an effective monetary policy. I wish it wasn't like that, but my job is to be as realistic as I possibly can, and also, manage risk. So that looks like the lay of the land. We wouldn't, if we don't know that period, we wouldn't understand it, because the periods we've always been through had, cycles, central banks stimulate, then they tighten monetary policy when the economy overheats and so on. That's no longer the world. And the wealth gap and the populism is a different thing. And the rising power challenging the existing power is a different thing. So you have to go back to that earlier period to get some sense. I'm not saying it's going to play out the same way, but I'm saying those forces are the major forces that we have to pay attention to.
Let me finish on a lighter note. Your father was a jazz aficionado.
He was a musician, yeah.
Do you play?
He played woodwinds, yeah.
Do you play?
No, he tried to teach me, and that didn't work. He wanted me to
so what do
practice
you
scales.
do apart
I
from
love
just
listening to music. I'm crazy about listening to music, and then I love the ocean, and so I love exploring the ocean, and I like snowboarding, and I love my family.
Ray Dalio, it's been great to talk to you. Thank you, sir.
Thank you.